You better pay attention to what's going on because we're turning off of a major trend line of resistance in the monthly time frame going back nearly 100 years to the 1929 peak. We're breaking the 5 month moving or the 5 month winning streak, and we're getting a topping tail for the month to close out October. Okay, now we could rebound back up and fill the gap, but this is a topping tail and this is a shooting star. Okay, we've already had the 9 count in the monthly time frame. We've gone a little bit higher, so again, it's telling us momentum is beginning to get tuckered out. I would not ignore this monthly close here in October. Again, we had a rally in October and we sold off. The rally that we had was given back, and then we closed 1% lower than the previous month's close. So we had a rally and we gave it all back. And again, we peaked there on the 17th in mid-October, and we've sold off. And we're getting the topping tail at major trend lines of resistance in the monthly time frame. Nasdaq monthly chart, again, I told you I thought we peaked over here. So far, that high is holding. Okay, that was the July peak, and we got a 9 count at that time in the monthly time frame. We've come back up, and what happens? We get, again, another topping tail at this level of resistance after filling that gap I've talked about at great length and detail, 20,400. We're down for the month 0.85%, okay, and we are down, NASDAQ monthly chart, 170 points. We had a rally, again, above this level, and gave it all back, okay? Oh, no, that can't happen. Again, I told you, I'm looking for a top. Either we get it with the breaking of those trend lines and the breakdown of the triangle on the S&P, or we go up a little bit higher and then we do it. But again, I told you I'm looking for a top. Ended up getting topping tails on the monthly chart. I believe we have a double top that has formed or is in the process of forming on NASDAQ. My guess is that it, again, is not going to move above this high over here. When I call the top, I believe that top is the top. Could go a little bit higher. My guess is we won't, but again, I'm looking for a double top either way. Wouldn't ignore these trend lines. They're coming at major, or these topping tails are coming at major trend lines in the monthly time frame. This one, we tagged it. This one was just below it. It's a lower high. The S&P slammed right into the monthly trend line. And going back to the S&P, as we're getting this topping tail, this shooting star candlestick in the monthly time frame, the S&P is getting that topping tail. It's coming up just under this trend line. Again, the trend line's around the high 5,900 area. We've hit the high 5,800 area. Again, we've overthrown the trend line, excluding the shadow from the 2,000 top. That's a red trend line right there. And again, looking for a top between 5,750 and 6,000 at these trend lines. We're right in between them right now. If we do go higher, it would be the high 5,900, just under 6,000. But we could turn with that topping tail that we had in the monthly time frame. If, again, we get support taking out, confirmation of signals, and again, start seeing those weekly divergences begin to play out, and that is possibly happening right now. I told you the Dow had a big sell-off last week, continued this week. It got a topping tail in the monthly time frame right at that trend line. Okay, we had a hanging man candlestick the previous month. Now we get a shooting star topping tail, and we couldn't close above that trend line. We had slightly overthrown it last month, and then again we tried to clear it this month and couldn't do it. We had an overthrow. Again, this is 125-year trend line that we are turning off of. Again, it is likely that we are going to form a major reversal here. Eventually, I think you can get a very, very large head and shoulders, didn't draw that, very, very large head and shoulders, and eventually come back and take out the 2020 low. And I think that is likely what's going to be the case. We're going to move into a bear market, but people go, no, that's not possible. The Fed, plunge protection team, and all the rest of it. You can see as clear as I can, we are turning off a long-term trend line. S&P is just below the long-term trend line. Topping tails, and we'll be watching that. NASDAQ's already turned off of its trend line in the monthly time frame, and maybe I'll show you that over the weekend. Saw the VIX jump today by over 13%. It's holding, the 50 is holding above the 200. Price is holding above the 50 period moving average. And again, when you're above the 50 period and you're going above the 18 to 20 area, bad things start happening on the S&P 500. And that's what we have right now. We're above that 20 area now, currently at 23. We saw the MACD firm up at the center line here. Stochastics moving above 50. So again, volatility continues. The sell-off could continue, but we're at approaching horizontal support in our 50-period moving average. We're at the horizontal support level, just above it right now on the S&P. We'll be watching, but we've clearly had a break of support today with the rising trend lines on the daily chart, with the lower boundary of the rising wedge, including the shadow. You know, we've had that reversal of conditions since the previous Wednesday, right after we had peaked on the 17th. Here, at that same time, we saw the momentum line turn bearish. Now, Nasdaq had turned back to bullish, and I told you the awesome oscillator bar turned back to bullish. So I told you we could see an upward resolution of the triangle, and we had this shaded area telling us that a squeeze move is about to happen, up or down, and we had a downward resolution. Now we're seeing the background turn back to red, and again, we couldn't see momentum get back into positive territory. So again, we did see the diversions here with momentum. We got the diversions on other indicators like the MACD getting a Class B diversions. Anyway, when I talk about a divergence, you know, usually the indicator will make a lower high and price will make a higher high. That's what I mean by bearish diversions or negative diversions. Somebody asked me about that. Sometimes you get equal peaks like what we had almost here. Well, this is slightly lower, but on the MACD we got almost equal peaks. That's a Class B divergence where the indicator makes two equal peaks but price moves higher. Class C divergence is where we get two equal peaks on price and the lower high on the indicator. We're taking out the cloud. We're seeing now the shaded area telling us, hey, a squeeze move is coming. That's now happening. Again, we'll be watching the gap to see what happens. Does this a gap and go and we continue to do more damage, or do we go back and try to fill the gap? And we'll be watching. We had some warning signs up at top there. No major sell signal, though, yet, but we did get one on Nasdaq. Again, these signals right here are momentum. So the takeaway here, and on the bearish reversal of condition signal that turned back to bearish Nasdaq today, it has been bearish on the S&P, and again the momentum line has been bearish. So again, the triangle has a downward resolution. Momentum could not turn back up on the S&P. We'll see if it remains bearish. If it does, we can get a bigger drop. We'll be watching. We're right here at this key support area at the September, or I'm sorry, at the July peak right there. We're right above that area, so we'll be watching that. And that's the well, I didn't draw that very straight. That's the 50-period moving average at that area too. Now, while we got these T's warning of, hey, momentum could be shifting here, that was correct. And then we got the momentum line turning red and the red arrow and so forth. We did not get the T's on Nasdaq. A couple of things. Again, we didn't get any of those T's. We did get some warning signs here. Bearish with the momentum line back to bullish. Now it's turning back to bearish with this gap lower. So again, bars turning back to red, reflecting the trend. We did break the cloud. That gives us a sell signal here, and yesterday's close, we did get one sell signal there. Again, this could just be a pullback, or it could mark a reversal like what we had over here. We got a couple of them over here, so we'll be watching. And then while the S&P momentum is negative, it's still in positive territory here. So again, if we're going to get a bigger sell-off right now, got to go negative, and we got to start taking out horizontal support on the S&P and the 50-period moving averages on Nasdaq, S&P. We'll be watching these gaps. Fill them or not. And we saw momentum and trend signals turn bearish the previous Wednesday, so just about a week and a half ago there. Again, we saw the momentum line turn bearish in the daily time frame on the S&P at that time. We tried to turn momentum back to bullish, but the trend signals did not. They remained bearish. This is S&P intraday momentum going negative. Watching what happens at key horizontal support. The cloud flipping bearish here intraday. Does it remain that way, or do we try to go back and fill the gap? In these intraday charts, they turned bearish a week and a half ago. Momentum tried to turn bullish, but the trend signals could not turn back to bullish. And again, we had the back test of the broken trend line there. And then now we're breaking with today's move. We're breaking A decisive break of the trend line, including the shadow. And again, signals here remain bearish. Momentum tried to flip, but it failed. Intraday charts, again, the trend signals are still bearish from a week and a half ago. Same thing here. I told you if the triangle had an upward resolution, we could see a multiple point divergence develop on these intraday charts. Again, turn bearish momentum and the trend, and we broke that first trend line that we talked about. Tried to flip momentum back to bullish here. Momentum line tried to turn back up, and it quickly failed. And again, so far, the breakout and back test of the first trend line that broke, rising wedge, that lower boundary, so far that scenario is playing out. And again, we have a sell signal from the previous Wednesday. So again, nearly a week and a half ago. If these signals remain bearish and continue to cause the S&P to slide further, or if we attempt to rebound and fill the gap, we'll be watching. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Donate any amount. You follow the link below to take you to a secured site. You can take a moment to do that. I would really, really appreciate it. I thank you for that. All right, today we had earnings drag the market down. We had earnings from the close after the close yesterday drag futures down, and that spilt over into the session. The market down sharply with the Microsoft earnings and Meta earnings being a drag on the market. Got more earnings after hours. We have Intel, Amazon, and Apple. Here's Intel. Intel is popping up 15% at the moment, beating earnings and uplifting guidance. Good rally on Amazon after hours as well, beating earnings, and on cloud growth, beating on earnings and revenue. We have Intel up. It was up as high as 15% in after hours here. It's up about 13% at the moment, pulling back a little bit. It was down 3.5% during the session. The market had sold off. This is Intel. Then we're getting a rally of about 4% in after hours on Amazon. We've got a rally going on, but we gave up 3.28% during the session. So we're only recovering what we lost and just a little bit more than that. So again, we'll be watching to see what impact earnings has on the market. Far, AMD earlier in the week weighed down the market, then Microsoft and Meta. So again, hasn't been a good week regarding earnings. We'll see if the Amazon and Intel and Apple earnings can change that or not at the jobs report tomorrow. Amazon, we're up about, well, we were up 4.5% there. It's fluctuating between 4 and 4.5%. And then the Apple earnings, Apple sales are up 6%. Earnings beat, and we had Apple beat on earnings and on revenue. But the company pays that $10 billion European tax charge. Shareholders digesting the earnings and that news, and down 1.78% at the moment. Again, it was down as much as 3% when I looked at it when the earnings first came out. We're rebounding off of those lows, but again, we'll see how we close out. We'll see what it looks like tomorrow by the close. Amazon is rising about 4%. Intel had risen as much as 15%, currently up around 13%. Apple down about 1.5%. So there you have it. But it was really Microsoft and Meta that weighed on the market today. Microsoft during the session was down by the close of the session was down 6%. And Meta was down by 4%, just over 4% during the session, and it closed that way. Weighed on the market today. Earlier in the week, we get the AMD earnings, and again, created a lot of volatility in the tech sector. We got the inflation data, the PCE inflation data. The PCE came in month over month as expected at 0.2%. Core came in as expected at 0.3%. The year over year came in as expected at 2.1%, lower than the 2.2 previously, but the core came in just slightly higher It was expected to come in at 2.6. It came in at 2.7, which is the same as it was the previous month. So there you have that. Then we have the jobs report expected tomorrow to come in at 110,000 on the lighter side with job creation. We had that blowout jobs report last month, 254,000. Again, my guess is right before, a couple days before an election, you're probably going to see a good jobs report. Probably, I'd really be surprised if a bad jobs report came out, especially since we've seen the numbers being massaged over the last year and a half. Now, momentum flips back to bearish with Nasdaq. Remember, momentum had turned back to bullish. We got a bullish reversal of conditions. We saw the momentum line turn back to bullish, but it flipped back to bearish today. That green bar, but it quickly turned back to red. We're still in positive territory. I told you if we had an upward resolution of the triangle on the S&P and bounced out the trend line, we could see it join the Nasdaq, and again, it could also get another reference point of a divergence. Nasdaq did, S&P did not, so they are diverging from one another in that Nasdaq made a higher high, the S&P did not. Oftentimes, usually, I should say it's the other way around. Usually the S&P makes a higher high and Nasdaq doesn't, because usually it's tech that leads us up and down, and so that's why it's usually that way. But nevertheless, our stochastic has rolled over here. We've got the diversions going on with the MACD. The awesome oscillator does have the diversions here in that we are making a lower high here. We'll see what happens. Coming back to the 50 period, but again, see the little red arrow? You see the cloud, it's flipping now. See the little red bar? Momentum's flipping, so we'll be watching the trend line. We'll be watching the 50 period moving average. Again, there was a breach of the trend line lower boundary of the rising wedge. Earlier in the week, we did not have that red bar on the awesome oscillator. We're getting it now, and again, we didn't make a new high, but I believe, again, we're forming a double top. I told you, I believe we're going to get a lower high, but I told you Nasdaq Composite went higher, Nvidia went higher, and again, I believe both of them are also making double tops, but I thought we would fill that gap and make a lower high on Nasdaq, because often Nasdaq diverges with S&P. So while we don't have a divergence in the most recent price action with Nasdaq, I'm sorry, we do. Nasdaq went higher, S&P made a lower high. We have a larger divergence in that Nasdaq so far is making a lower high, S&P made a higher high. But here you can see we're getting a red bar. We didn't have that at the beginning of the week. I told you to be watching for that in the weekend video, to be watching to see if we get a red bar. We started the week off that way with the S&P, and we still have it. Nasdaq, it's now showing up with the sell-off. We're right at the 10-week moving average here in the weekly time frame. We'll be watching to see how we close. Do we recover with the jobs report or with earnings, or do we just get a horrible week and try to rebound next week? We'll be watching the gap down from today. S&P back at that 10-week moving average. I've been warning you about the resistance in the weekly time frame. We've had this red bar all week. And again, we'll be watching to see how we close. Does the high from 3 weeks ago, does that high now hold? And again, the peak that we had there in mid-October. P weekly chart here. We had the triangle on the S&P 500. I told you momentum has remained bearish on the S&P 500, but we were forming a triangle. I told you the triangle can break down or can break up. I told you I thought it would break up. I was wrong about that. It broke down. I have the guts to tell you what I think, because I thought we would get a green bar here on the awesome oscillator. We still may do it if we try to bounce surrounding the 50 period moving average. But again, it may just set up a lower high filling the gap now, because we've done damage in breaking the trend line now. And remember, and I'll show you in a moment, we never got the confirmation to the break of the original trend line. I'll show you that in just a moment so you can see it. Again, I'll be watching to see what happens here. Do we now start going negative with the awesome oscillator, or does it still attempt to get some green bars going into next week with the election and the Fed? Do we go back and fill that gap? What is this gap? And you always want to watch a gap. Is it a gap and go, where you just start going in that direction? And that's what we really had back in July. We had a gap down over here in July, and it was a gap and go, and you just kept going. And we didn't come back and fill that gap until a later date and get a gap and trap. Here we had a gap down, and it was a gap and trap, and then we began to move in the other direction. You see that? And here we had a gap and fill. We gapped down here, but then we came back and went up and filled that gap, but then resumed the decline. So a gap and go, a gap and fill, a gap and trap. Is this a gap and go? Is this a gap and fill where we go back up or maybe go a little bit lower and then come back up and fill that gap and then resume the decline in the direction of the gap? Or is it a gap and trap where we come back up and we fill the gap, but then we still try to move above the previous high? So you always want to watch a gap. Is it a gap and go, a gap and fill, or a gap and trap? But again, the momentum has been bearish on the S&P 500. So again, I'm going to continue to watch the awesome oscillator here. Is it going to go negative now? Or is it going to try to tick back up and get some green as we move towards the presidential election, as we move towards the Fed and continue to be in earnings season? And then again, I think there's a possibility of a post-election sell-off. We could also see concern also around the Fed slowing the pace of the rate cuts, which again, I think it's going to be a quarter. There's the people that told us that the Fed was making a monetary policy mistake by not cutting rates long ago. They should have already cut them aggressively. The same people, a lot of them anyways, are now telling us, the Fed had made a mistake by cutting by half. And again, do we continue to see selling and see this go negative and momentum remain negative, or do we see it try to turn back up? We'll be watching. Momentum has been negative since October 23rd right here. We saw the S&P peak in mid-October on October 17th. So we've had, the sideways move form a triangle. Now the triangle's breaking down. We lose the 20, but we did see momentum shift, over a week ago on the 23rd, which is the previous Wednesday from last week. So again, we'll be watching what happens. We've now come back to test the 50 period. Do we continue to slide or do we get a rebound? We'll be watching the gap closely. S&P 500 daily chart here. On Nvidia, again, Nvidia got whacked again today, down nearly 5%, 4.72%. It's coming back down to the support level right here, but it broke the 10 yesterday. It broke the 20 today. We'll be watching. Again, the Nasdaq moves in lockstep more often than not with Nvidia. Nvidia did move slightly higher. I'm looking for a double top. Maybe it's done, maybe it's not. I'm looking for a double top with Nasdaq. I'm looking for a lower high. It's got it. So maybe that's all she wrote. We'll be watching. To give you a quick update on Nvidia, we're seeing the Nasdaq come back down and breach the trend line here ever so slightly. So again, we'll be watching, and it's become oversold. We had this divergence. This gave us some volatility here, and we went back up. We made a new high just above the high previously, and this was 3 weeks ago that we filled this gap. 3 weeks ago, again, I've been predicting we'd go up to 20,400, fill the gap, and top out. Well, that's what seems to be taking place here. This diversion is playing out on the Nasdaq 60-minute chart and on the MACD. It's going negative, so again, and we're breaching the trend line a bit here now on Nasdaq. Let's take a look at the daily. Well, before I do, we're down 2.27% for the week. We're down 461 points for the week on the weekly chart. So again, we'll be watching to see what the weekly close looks like on Nasdaq and S&P. And I told you I thought we peaked over here. We're going to get a lower high. So far, that's playing out. We'll see if I'm correct on that. I called a top on July 11th, the day after we peaked. I told you I thought that was a top. I told you I thought it was a top leading up into that peak when it was happening. Wrong. We go up and we hit that trend line again. Again, I think we will end up getting a lower high. I think we're getting a double top. I think Bitcoin's forming a double top, and I think Nvidia is forming a double top. Now, on Nasdaq, I talked about the trend line here, and again, we were above the 10 and 20. We gapped down below both of them. Nasdaq had a very, very ugly day. Again, down nearly 2.5%, down nearly 500 points. Had the 50 period directly below right here. We might try to bounce off these 50 period moving averages. S&P's at that same area, but we've got the divergence is complete. We've got it on the RSI. We've got it on the MACD. So the divergence is now done. We very well could have topped now and not move above the July 10th top. I've been talking about this at great length and detail. Told you we could still meander around here a little bit while the S&P tries to go make a new high, but they diverged from one another. The S&P made a lower high, and the momentum continued to be bearish on the S&P. We couldn't flip it back, and we had a downward resolution of the triangle. So now we're getting a break of the trend line here, and this is the log scaling. It looks a little bit uglier with the log scaling, not as bad on the linear scaling, and I use both, but this is the log scaling, so it looks more like a decisive break rather than on the linear scaling. It doesn't look as bad, but still a break. There's a linear scaling, and it doesn't look as bad, but again, scaling's just a little bit different. But again, be watching to see if we try to bounce in this area off of the 50 period or not. We've seen the RSI now go below 50. We have now this negative divergence that is now playing out here on the Nasdaq after filling the gap. And again, we could not make a new high. I told you I thought this was a peak. I still think that. I think we have a double top. We'll see if we attempt to rebound, or do we go lower? The VIX is predicting we'll have an update either Friday or Monday, at least an 85% chance that we will. We'll see what happens. Again, right now, futures and after hours isn't doing much with the earnings that we've had. We have the jobs report tomorrow. The jobs report right before an election, probably going to be good. My guess is it would be. Private payrolls came in double in the week, so we could see a good jobs report. We'll see what happens. This rising wedge right here. We also had the smaller rising wedge, which broke down and back tested, but we're breaking right here on the Nasdaq, the larger rising wedge from the August low. So do keep that in mind. And again, that's from the September low, and the S&P did the same thing today. They both broke those trend lines, but they did technical damage. They both are on the Nasdaq. This is again the linear scaling. Doesn't look as bad as a log scaling. But again, we'll be watching to see if we go back to fill that gap. And if we do, again, if we get back above the trend line, then we may end up having to redraw it. We'll be watching the 50 period, the 100 period directly below. We'll be looking at these divergences. Do we just start moving into a free fall? Does this gap get filled at a later date? Does it not get filled at all? I told you I thought this gap would get filled. It didn't have to get filled, but I told you I thought it would. So we'll be watching that gap, and we'll be watching what happens. Do we get a rally with the Fed or the presidential election next week with earnings? What happens? We'll be watching this very closely. Is it a gap and go, a gap and fill, or a gap and trap? So keep that in mind. We have, again, the back test. Look at the smaller rising wedge here from the September low. And again, we broke down, we back tested this level, and then we came down. So that back test is us playing out. Same thing on the S&P daily. Those two lower boundary trend lines on Nasdaq. We had two lower boundary trend lines on the S&P 500. And we're starting to see some real weakness here. We're down 103 points for the week on the S&P 500 weekly chart. And then we have tomorrow. We'll see what happens. Do we recover or get a bigger sell-off? 103 points. We're down 1.77%. And again, a good chunk of that with today's sell-off. Told you again, had an upward resolution to the triangle, we would come up into this area. If we had a downward resolution and broke the trend line, then again, we could see the sell-off. I thought we would see the upward resolution of the triangle because we got that green bar on the awesome oscillator with Nasdaq. It did not play out. We had a downward resolution with the triangle, but I told you, regardless of which way it played out, I was looking for a reversal. I was looking for a top, and I think that, again, that is now forming here. See if we try to rally with the Fed or with the presidential election or with earnings, Amazon, Apple earnings. We'll see how we close tomorrow, and Intel. Same thing here on the S&P 500. Again, we had two trend lines. This red one right here, excluding the shadow, that we broke down and we back tested. Now, again, I pointed out we never got from that bar, we never got the confirmation and follow through. I keep telling you, you got to get confirmation and a follow through. Well, we now have confirmation. Now you need to see a follow through. And again, we'll be watching. Do we go back and back test the trend line and fill the gap, the broken trend line here? I'll show you these by themselves real fast. But so far, this trend line scenario, our breakdown of the rising wedge and the back test scenario is playing out. Now we had the triangle again from the 17th, the peak that we peaked at mid-October. We corrected pretty much sideways. Now we're breaking down from that sideways movement. And again, you could break with the triangle, you could break up, or you could break down. I talked about that at great length of detail. I told you I thought we would end up breaking up with the triangle because Nasdaq moved to a new high. I thought S&P would try to join it, and Nasdaq got that green bar on the awesome oscillator. So you could break either way. I told you I thought we would get one more push higher. We did not. Now we'll be watching the gap. I was right about this triangle. I was wrong about this triangle. But again, I'm looking for a top, okay? I'm telling you the different ways it can play out. If it played out to the upside, I was watching the trend line right here, the red one, and the upper boundary of the rising wedge. We broke down, so that other trend line is playing out, but we did break this trend line, clearly breaking that today, a decisive break, and again, that broke the trend line as well. So this is technical damage. They're both going back to the 50-period moving average. S&P closed again near the lows. The Dow a little bit off of the lows. Nasdaq it's above the 50, S&P right at it right here, and this horizontal support level. So could we get a bounce at this horizontal support level? That is a July peak and the support from the triangle. Could we get a bounce in this area or slightly breach it and get a bounce and try to go back and fill the gap? Very, very possible. It's also very likely. Now, you break this level, that would be extremely bearish, holding below the 50-period moving average. So we'll see if we attempt to rebound back up and fill the gap. Market having to digest earnings, and then the presidential election, and then the Fed, and tensions in the Middle East. A lot for the market to digest right now. This is the rising wedge with both of the lower boundaries. We had that divergence on the RSI. I told you we could see a triple divergence. We did not get it. Momentum remained bearish, and we were just straddling up and down, forming that triangle above and below the 10-period moving average. But momentum has been bearish after we peaked here on the 17th. Again, momentum turned bearish just over a week ago, the previous Wednesday. So again, just over a week now, momentum has been bearish. That's given us this sell-off so far, and the downward resolution of our triangle and the break of the trend line, which I told you if that happens, that's going to be very bearish. Here's the triangle here, and again, here's the rising wedge with the break of this trend line right here. You can see it. Could we back test that and go back up and back test it? Yes, we could. And again, we had this divergence right here give us a sideways correction, and now the breakdown. So again, we'll be watching. Now we're becoming oversold. Again, we could still go lower again towards the horizontal support area. We're just above it right now in that 50 period. We're testing it in the daily time frame. So we'll be watching. Do we attempt some kind of try to find some kind of short-term bottom? But the diversions right here, I told you, it can form into a multiple point divergence if we got an upward resolution, or again, if we didn't, you get a downward resolution, you break the trend line, you break the triangle. It could be a reversal pattern as well, rather than a continuation pattern. Again, the rising wedges. Here's the one that we broke today, and again, both Nasdaq and S&P broke the trend line from the August low. This includes the shadow. We broke down from that, and the triangle broke down as well. So we had a decisive break. Now we need to be watching the gap, and again, the horizontal support level coming into play right here as well. We'll be watching that. We rise back up. Do we back test the trend line and then resume the decline? So we'll be watching. Do we get a back test and go back up and fill that gap? Maybe going into next week, or with earnings, starting with earnings on Friday, and do we get it surrounding the presidential election or with the Fed? Do we rally with the presidential election, sell off with the Fed, get a post-election sell-off? We'll see how it unfolds, but again, you see what's going on with the weekly signals. I told you a top is under construction. I told you it can form a couple different ways, and right now it looks like our rising wedges are breaking down. Both of the trend lines now being breached. Back test scenario, and then the one we had here, including the shadow. On the Nasdaq, we had turned back up with momentum. S&P never did that. The divergence here has played out again from the peak in mid-October, and we've seen this sell-off here now going into late October as we close out the month. Far, this scenario is playing out, and I've talked about both scenarios. This is one excluding the shadow and the back test. So far, this scenario is playing out. We'll see, again, do we attempt to fill that gap immediately, or do we come down and start and bounce off support, or do we start breaking this level of support. Again, previously we got above it. This was the Fed day. We got above it. We back tested it, and then we got this rally back up. So again, we're going to be looking at this gap area over here to see if we can bounce off of the 50 and this horizontal support. Below that, you've got your 100 and your 200 down here. So we'll be watching, can this horizontal support level hold? And if it does, do we try to back test that other trend line, or do we get something bigger and try to back test this one again and go back up near the highs? We'll be watching both of those trend lines very closely, but both of them have now broken. So again, this seems to be the pattern that is playing out, this trend line right here with our rising wedge.